you, Ceann Comhairle, and I so welcome the opportunity to have brought forward this legislation to the House. And as many deputies have, I hope they won't mind if I echo their tributes to my predecessor, Minister Sean Fleming, who was the first dedicated Minister for Credit Unions and who put enormous work into this in collaboration with the credit union sector and the department. And I do want to take the opportunity again to pay tribute to him. And indeed also to Deputy Harkin, who herself put forward a private member's bill on the credit unions and on improving credit unions generally. And indeed, I'm so open to discussing that with her and how that sits with this piece of legislation. If you want to meet privately afterwards to go through some of that in detail, some of the policy ideas that you've put forward, and to engage in that and work together collaboratively, because I think that is the real strength of the piece of the legislation to date. Of the credit union movement more broadly, and we'd like to continue that ethos and that attitude at all stages throughout the House, and that's certainly my approach. I really want to thank deputies for their contributions. I have learned so much from the contributions in the House. I've learned so much from the different experience that members have had with their credit unions, either individually as elected members, and their perspectives on the value of credit unions to the Irish economy, to the Irish community. I think, as Deputy Horgan said, Nessa Horgan said, finance is about society, and she's absolutely right, and the credit union plays a key role in that. I think, Ceann Comhairle, you had said that you couldn't put a value on the credit union movement in Ireland, and again I want to echo those sentiments. I want to take time to, I've listened very carefully to deputies throughout the 3 days of hearings, and I do want to take a few minutes to respond to some of the different issues that have been raised, and in no particular order, but just in the way that I've sort of collated it. You are, just in terms of collaboration and first and engagement with the sector, because I think, as Deputy Fitzmaurice just said there, it is so important to do that. And in fact, Deputy Harkin raised the question of the stakeholder roundtable, which is something that has already begun, Deputy, I can tell you. And in fact, they're meeting at 3 o'clock. As soon as I finish here, I'll be putting on my runners to run down the road to get to that. It's a quarterly meeting and it is happening regularly. And I will be in attendance as often as it is possible for me today. Today I have a particularly good excuse for not being there at the beginning, but that won't always be the case. But the opportunity to engage with the sector is I have taken it myself since being Minister just for these 2 months. But this bill is the product of that work, of a really deep engagement with the credit union sector, with the different representative groups. And every opportunity was given to the sector at every stage to put forward their views and proposals, and they were all considered. There will be further amendments tabled at committee stage. Most of those, I think, will be technical in nature to ensure that the proposals in the bill, such as the corporate credit unions, and I'll come back to that, and the ability to appoint a manager as director, that they work as intended. But it's fair to say, and many deputies referenced the letter from the Irish League of Credit Unions, that that they see more amendments. We received that feedback last week. So as recently as last week, we received a number of new amendments to be considered, put forward by the sector. And again, as always, at every stage, we remain open and engaged to discussing those and to seeing how and if they improve the bill or enhance the functionality of any part. And we're completely open about that. Not everything, not every proposal is acceptable, or not every proposal is going to work, but it's important that you're talking through it in a collaborative way and seeing what can be done. The bill emanates, as deputies know, from a review of policy framework, which was an 18-month-long review process carried out with all the credit union stakeholders. That was completed in March 2022, and I think Deputy Ceann Comhairle had asked about a publication of that, and I've no difficulty in providing deputies with an update on that, particularly in relation before committee stage, or to meet and discuss the details, the outputs of the review in any way. I think it was important that so many deputies referenced the space that is created for citizens in communities right across Ireland, yes, in rural Ireland, but not uniquely in rural Ireland, where retail banks have moved out of the financial services landscape. Deputy Dillon, for example, referenced the Bank of Ireland closing in Kiltimagh. There's a very strong credit union in Kiltimagh, which is so welcome. Deputy Fitzmaurice himself referenced Glenamaddy, and indeed Deputy Shortall covered this in good detail. As Deputy Harkin said, if we didn't have credit unions, we'd look to invent them, and you're absolutely right. But fortunately, we do have the credit union movement, and I think it's important to reflect on that as we consider the public banking space. As Deputy O'Cahig said, we do need a public banking model, but in many respects, I disagree with Deputy Shortall in the sense that we now need to go and create one. I think we need to give the credit unions every opportunity to work best first. We are still a very small economy. We're small geographically. We need to have community banking, both geographically and locally, but also as an ethos. And we have it actually in the credit union. We have the physical premises on the ground. We have the establishment of the ethos. We have the volunteers there. It has the finance to be able to do this. And I really think we should be, as a government, putting our efforts behind making that work as well as possible, as I said in my opening speech, vis-a-vis the exponential growth of the fintech sector, and really focusing our efforts on that. And if, having reviewed that and seeing how that's working, there's more to be done, well, I certainly, for one, am very open to that. I myself come to the credit union movement new as a minister. In my house growing up, my mother worked in a bank, so I opened a bank account, not a credit union account. That's just an accident like that. But my father was the first manager of the credit union in Tullamore. So, you know, we are all connected to the credit union movement in many ways. A number of deputies spoke about the challenge many credit unions face in growing their lending. And I think linked to this was a perception about relaxing the capital requirements. And I think Deputy Harkin here today referenced that. So the capital requirements there are there to protect the credit unions from unforeseen losses and to protect their members' savings. Under the central bank regulations, the minimum regulatory reserve to be maintained by all credit unions is 10%. But 10% has to be set against the banks, which are about 8.5%. So it's not greatly higher than the bank requirement in the round. So I do appreciate the points that deputies are making, but it isn't that much higher. And actually, credit unions are generally well capitalised. They have a sector average of 16%. So it's not as though everybody's at 11% and looking to try to change it. Actually, the sector is at 16%. And so I don't agree that it's as pressing a challenge as perhaps has been stated in the House. And I think I'd be looking at those credit unions that are closer to that and seeing where they're going and how they're getting on. But I don't think it's as pressing a challenge, and it certainly isn't as large a differential as might be the case with the banks. And obviously the capital requirements don't impede or prevent the credit unions from lending. Staying on the question of financial regulation and in relation to lending limits, the central bank lending regulations were reviewed, as Deputy knows, in 2019 following a full public consultation. And I think it's really important to say that a lot of extra flexibility was given to credit unions at that point. So, for example, deputies are aware that those credit unions with assets of 40 million or less can only lend 7.5%, that those with 40 to 100 million euros of assets can lend 10%, but those over 100 million euros, of which there are quite a number in Ireland, 67 in Ireland, can lend up to 15%, but they have to apply to the central bank to do so. But only 10 of the 67 have actually made that application. So what I'm saying is that the additional flexibility has been there since 2019, but credit unions need time, I imagine, apart from anything else, to make the step to look for the higher lending limits. But it is already there. Now, I would like to see more. I would like to see more lending. I would like to see more mortgages. But it's just to reflect back some of the facts that deputies have raised. I do acknowledge one of the issues that Deputy Troy raised regarding the requirement for a business plan for a loan, for example, for a van of €25,000. Indeed, the manager of Mullingar Credit Union raised that with me directly, and I have already raised some time ago that issue with the central bank as being one I saw of too much interference in the practicality. A 5-year business plan for a €25,000 loan for a van, to my mind, is excessive. But it is this type of dialogue that we can have with the stakeholder engagement, with the memorandum of understanding, with the enhanced engagement by the central bank. That sort of dialogue, that to me seems like a practical problem that should be raised in that forum, that we can raise, and I'd like to see more of that. I think as well then, if I just want to cover some other points that were highlighted, I'd like to highlight the importance for the credit union sector, I believe, of really taking advantage now of the opportunities that are provided in this bill. The provisions in the bill to refer members, for example, and for loan participation are really important enablers for ensuring that the sector can develop mortgages. I also welcome Deputy Nash's proposal for reviewing of an operation of the substantive parts of the bill. It's something that I've raised myself with officials all along. If we give the credit unions the opportunity here to become more involved in the mortgage market, to offer more credit unions, to work slightly differently, to become that very strong public banking force, to become that stronger community banking force, and it is not taken, then I'm not sure that Ireland has really benefited. And it is very important to me to support the credit union sector, but it is much more important to me that every citizen in Ireland has access to the type of banking and community banking services that we have all discussed here. So I think it is important that we review and consider the operation of these things. It is already the case that, as I said, the lending limits changed in 2019. Some of that opportunity wasn't taken. I think Deputy Boyd Barrett yesterday raised, and another deputy did, around the capacity to invest, for example, in improved housing bodies. Again, that was permitted to be done up to €900 million for those regulated funds, but to date only 13 to 14 million, I think I said yesterday less than 20 million, has been so invested. So it is about taking the opportunities that are there. This bill is an important further step in that, and I would suggest that it is appropriate for this House to have an opportunity to consider how that works. Other things I suggest might be considered over time might be the lending, the ministerial role in setting lending rates and so on. But you know, let's get this bit right and reflect on it as we go. I'd also like to respond to the questions that I think Deputy McGrath and I think the last Count Corla raised in relation to corporate credit unions, and other deputies raised that. The word corporate is just the word that was picked. It could be anything. It could be collaborative. It's not really it's not really about corporatising credit unions. As Deputy Harkin said, it's simply a credit union whose members are other credit unions. That's basically it. You could call it anything. It's a corporate credit union whose members are the other credit unions. It is owned by the credit unions, and its point is to be a collaborative vehicle to set up more collaboration in the sector. And we already have similar vehicles in using similar, slightly different legal structures, but they're the same thing. So, for example, Cultivate, that I think Deputy O'Cahasig referenced, is a collaboration of credit unions that come together to provide agri-loans. And the corporate credit union movement, and I'm happy to change the name if people don't like it, but that is the point. It is simply a collaborative venture so that you can pool resources and access mortgage products perhaps slightly differently, access other products slightly differently. And it allows, again, so many deputies talked about balance. There are very many credit unions. I mean, like, for example, I met a group of credit unions in Tipperary, as Deputy McGrath had referenced. One doesn't want to change, would like to stay in the space that it is in, small, community-driven, absolutely fine. Others would like to get rid of the common bond entirely and go and move in a completely different direction. And what the government is trying to do, and what I'm trying to do, what I hope this House is doing, and I've heard this call again, balance, 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 is to reflect the wishes of both and to provide the opportunity for both to thrive, to retain the volunteer, community-driven focus, but also enable the professionalisation and growth for those who really do want to operate in a different way and at a different level. And I don't think those things step across each other really in any way. I think that both are possible, and what's really important is that if you come in as a member, that you have the referral pathways to other credit unions, that you're not limited or prejudiced by where you live and the common bond that you're in because of the services that your credit union happens to or chooses to act, as Deputy Shortall described, a lottery, a postcode lottery in relation to it. The referral pathways are really important from the perspective of the citizen, and it also enables credit unions to take different perspectives on what they wish to do. And it is their members that drive that, and that's so important. And indeed, you know, and I think it's important to say this bill is actually proactively protecting the volunteer ethos of credit unions. To that end, the bill includes an acknowledgement and a recognition of the role of the sector in developing a volunteer-led cooperative movement. In other circumstances, I would say that's not really the sort of thing that you put in legislation. That's a bit extra, but I think it recognises the importance of the credit union movement. And I think I want to recognise what Deputy Nash said as stakeholder banking. I think this is what this is. Every credit union member, I believe, should be able to open a credit union current account, should be able to access a mortgage product. That is not happening at present, and I would like to see that happening. Credit unions give members, as Deputy Gould, Deputy Moynihan referenced, through avoiding money lenders, through providing for death grants. I believe they give them dignity, peace of mind, respect, inclusion, financial inclusion, as Deputy Horgan raised, and they need to be protected, and protecting that balance is so very important, keeping the community focus that is at the heart of the credit union ethos. But as Deputy Bruton yesterday described, that we have to be ambitious for the sector. We have to be ambitious, as Deputy Higgins said, about productively using the assets that credit unions have. They have €20 billion of assets, and we're only lending €5.5 billion. To my mind, there's a significant additional amount, at least double, as Deputy O'Cahasig has said, that can be lent out for retrofit loans, that can be lent out more productively
productively for their own communities and productively and yet prudently using those assets. And I believe this bill can strengthen this. I would also say that my general view about the Credit Union Act is that it's a really strong piece of legislation. It's obviously a rather old piece of legislation, and that if deputies in coming to committee stage were minded to look at some of what might be regarded as some of the more patriarchal language that has survived over the years, I certainly am open to having a look at that also, to bringing it up to the best possible standard that we can achieve together. Thank you. I commend the bill to the House. Sorry, Mr. President.
Okay, thank you, Minister. Is it agreed that the bill be now read a second time?
Agreed.
It's agreed.